Well, okay, I think I'm going to kick off, and then, the content will start after a few minutes anyway. I'll do the introductions and so on and so forth, and then people will join in. As you know, Crystal, we have a Crystal here at Crystal. So when we fixed up this seminar about 3 weeks ago, we knew that today is going to be the record high of Bitcoin ever, all-time high, and that's why we set it for today. So, we got it spot on, as you can see. So that's you can have full faith in Crystal. So we have a very interesting session today. I think a lot of people will join us, and it's a lot of interest right now. Let me just kind of go through my presentation. Of course, we have to start with the disclaimer. Okay, this this is more like an educational webinar. So please don't consider this as any investment advice. Neither Crystal nor the other two speakers, we make these products available for retail investors. So please don't come to us asking where you can buy, Bitcoin or cryptocurrency or anything. So, we are not going to sell it to you. So that's just for your information. Yeah. So it's going to be an online, offline event because you guys, all our people, listeners, viewers are offline, but we are all, you are online, but we're all here offline. So the three of us are in the same room, so we can have a bit more better discussion here. Looking forward to a lot of questions from you guys so that we can answer that. So I've got Avnish and Michael with me. Avnish has got a hedge fund background. He used to work for Oxiv. Before that, he was equity research with Goldman and UBS. And he's spent the last couple of years working with the regulators in Hong Kong on trying to make Bitcoin available to investors. Michael has a technology background, so we've got a good mix here. 17 years in semiconductors, and he's been working in, again, in Hong Kong on the Bitcoin cryptocurrency area, blockchain, for the last couple of years. So, we've got a good mix. And I'm the co-founder of Crystal.ai. So, that's the three of us, and hopefully we have a good interactive session today. Okay. Where is that? Hold on. I just wanted to tell you one more thing just one more thing, that this video is going to be recorded, and we're going to make it available on our Crystal YouTube page. All the previous videos all available, so you can kind of go back and have a look at it whenever you feel like. So that it should be up in a few days time on our, hold on, let's see this. Okay. So with that, let me start with my presentation. So the way what we're going to do today is I'm going to speak for a few minutes, and then I'm going to leave it to Avnish to talk about it, and then Michael. We'll have a few minutes each by them, and then we'll take questions and have a general discussion. So the reason why Crystal is looking at Bitcoin, it's not a traditional asset class, is because it's relatively uncorrelated with the rest of the asset classes, right? So Crystal always goes with modern portfolio theory and allocation decisions, and we know that if we diversify in our investments, then we kind of are able to reduce the volatility of investments, but at the same time we can maximize return. So that's what our focus always has been, to diversify, look at multiple asset classes with mostly uncorrelated returns, and kind of Bitcoin kind of fits that bill quite well. So even now, a large part of the portfolio will be fixed income and equities, typically, and some commodities like gold, etc., and some alternative assets like Bitcoin. So that's how we do it. Now, everybody says that Bitcoin is hugely volatile, and it's like goes up and down 10% in a day, as we saw in the last few days itself. But you can size your position based on your volatility. So, for example, if the volatility is higher, that's traditional risk parity, and at Crystal we focus on some of these things relating to how to size your position and how you have a good portfolio allocation between the various instruments. This is kind of the recent performance. So obviously it's outperformed gold and it's outperformed S&P over the last couple of years. This is like 2-year graph, but it hasn't outperformed Tesla. Okay, so just to make that clear, so if you are looking for really high returns, then maybe Tesla is the way to go for you guys. Okay, so we'll see and we'll discuss this, but Bitcoin versus gold is kind of something which people have been talking about, and whether it's a good a good holder of safe value. I'm going to have a poll also. Let me see if I can launch a poll. to start this thing. Okay. And then just to get some excitement going. Okay, what do you think is a better store of values? Of value. Okay, I'm going to launch this poll. We have quite a few participants already. I think you guys can kind of see it. So I hope, yeah, we have more than 50 people. So can you please vote for this? So, this is what is interesting, like, and this is what all the discussion is all about right now. Like, where should, all the governments are printing money, right, left, and center. $1 trillion here, $2 trillion there. Even Hong Kong, the deficit is like 10%. So, is currency going to be worth anything? I put China government bonds because we did a webinar on this just like a month ago, and a lot of people are interested in China government bonds because they're not printing money as much as US Treasuries. Seems like people still love gold, huh? Even though it's down like how much is down quite a bit in the last couple of months, but yeah, over the long term, it's been kind of doing quite well. Okay, I have got how many people voted already? Okay, most of the people have voted. So wow, 50% is still gold. Okay, guys, we just we'll continue to believe in gold, and we will just give you some ideas about a potential store of value maybe in the next 10 years or 20 years. Okay, I'm going to end the polling now. Okay, that's the end of that one. Okay, and share results. So you guys can see what the results are, and gold has won clearly. Okay. So yeah, so basically, I'm sorry, it hasn't done well, but gold continues to be all-time favorite for all of us. So what is this? Hold on. Okay. But one of the things which is happening, okay, of course, Bitcoin doesn't have a history such as gold. I mean, gold has a few thousand years history, and Bitcoin has been around for 10 years. And it's only in the last 6 months to 1 year that actually there has been institutional interest. So no wonder Bitcoin lost out. There have been some regulated entities who are kind of doing, Bitcoin. There are some custodians offering Bitcoin, Fidelity Digital, some banks, Signature, Silvergate. There are multiple instruments available out there, like ETFs, funds, futures, derivatives, etc., etc. So a lot of things have changed in the last 2 to 3 years, and mostly the things have changed in terms of institutional interest. Earlier, we know that a lot of retail buyers were there of Bitcoin. People who were trying it out, but now it seems to be more institutional. In fact, I have a slide. You can actually go to this website called Bitcoin Treasuries. You can, go to just do a Google search, and you can kind of find out some of the big holders of Bitcoin and people who've actually disclosed it either because they're publicly listed or because they have to do the SEC filings. And you can kind of see that, Grayscale, which is what people have been buying in their IRA accounts, has almost $10 billion. MicroStrategy went up 20-30% yesterday. They own about $750 million. Square owns $100 million, and so on and so forth. So there's some institutional interest in this, and you can kind of check this out when you go here. So it's a bit more easier to handle compared with gold. It's more divisible, verifiable. So it's improving, but it's still very, very small compared to gold. And obviously the history is just like minuscule compared to that. But the market has been much more orderly. It's not been driven by tweet mania and all the social media interests. This time it's, people are not screaming about it all the time. So it's been more orderly, mature, etc. So, looks a little bit better than previously, when last time it hit the high 3 years ago. Some of the concerns, of course, that it's still like a lot of people think it's a bubble, short term, caused by like temporary weakness, low interest rates. You can't really use it for anything else. You can't really use it for trade, investment, or payments. But you can't really use gold either, except when you convert it. But I suppose it's gold is still a better, much better real world acceptance, and of course too volatile. Waste a lot of energy. So there've been some shortcomings which people have pointed out, but they're kind of more balanced out now, I think, in terms of shortcomings and okay. So what I'm going to do, I think that, so that's what it is. And then you can see this on that. So at this stage, I'm going to hand it over to Avnish. Okay. You ready? Yeah. So I'm going to hand it over to Avnish Okay,
Great.
and go on mute myself.
Thanks, Vivek. Let me share the screen. Okay, great. Yeah, well, thanks everyone for dialing in tonight. It's a pleasure to be on the call. Just to give you a brief introduction, Vivek did most of it. We are a digital asset manager in Hong Kong. We are approved by the SFC as a digital asset manager. I'm the CIO, and the name of the business is Arano Capital. Actually, just to explain that, Arano Capital is the blockchain arm of Venture Smart Financial Group. We launched our first crypto fund in June this year, which is a Bitcoin tracker fund. Actually, it's the first regulated cryptocurrency fund in Hong Kong. And we're planning another fund, which we've got approval from the SFC for, which is coming in the first quarter of next year. So moving on. Yeah, I want to touch on some points Vivek mentioned there, especially to do with the modern portfolio theory and to do with gold. I think we can tie a lot of comparisons in with gold and see how that looks. So the first point I want to make on Bitcoin is, how does it fit into that modern portfolio theory? Ultimately, the modern portfolio theory says that we want to include assets with a positive expected return that are uncorrelated with the other assets in our portfolio. And by doing that, we can enhance our risk-adjusted returns. So we have the efficient frontier and we're able to push that efficient frontier out. So, I often read and hear people talk about correlations between Bitcoin and the overall market. I think just from an observational standpoint, in March, we saw everything go down. There's a big liquidity correction. People assumed, oh, well, Bitcoin's correlated with the market and with gold. Actually, if you take the correlations that include that March period, and what we do here is we take weekly log returns of Bitcoin, gold, and the S&P 500, and then we do a regression of those weekly log returns. And as you can see, the R squared is like incredibly low. So Bitcoin and gold, 9%, Bitcoin and the S&P, only 7%. And really, whatever time period we do this over, we always end up with the same answer. So I think there's sometimes the wrong impression where we see things move together over a week or over a day. But ultimately, if you run the numbers, then there's very little evidence of correlation between these assets. And therefore, I think you can conclude that Bitcoin makes sense as an addition to any portfolio. The next slide is, I think Vivek touched on this as well, which is the volatility. And Fidelity did a survey where they surveyed family offices and asset managers on Bitcoin, and the biggest reservation is the volatility. I think what we would always argue is that the returns that Bitcoin has produced far outweigh the volatility that it's created. And obviously, as an allocation of a 1% or 3% or whatever it is into a portfolio, then obviously you're reducing the volatility impact. What I would point out as well is that if you look at the volatility over a long period of time, that's been coming down. So volatility was above 200 in the past. It's now settled at around like 50 to 100. And actually, in recent times, what we've seen is other asset classes have shown more volatility. So the likes of oil is more volatile than Bitcoin in recent months, and that's something I didn't think I'd hear myself saying. If we look at the scarcity of the asset, and I always like to consider, well, why does it make a good store of value? And the context is obviously the amount of money that's being created by central banks, which is a concern, and obviously that's pinned interest rates to very low levels. So we collected the aggregate M2, which is like the broad definition of money across the US, Euro zone, UK, and Japan. And what you're seeing there is like an explosion in the monetary base. And so there's a 20% increase in the monetary base in those main economies. Compare that to gold, and it seems like there's a lot of believers in gold on the call tonight, but gold supply will increase by about 2.5%, which has been fairly linear over recent years. Bitcoin, on the other hand, post the halving, the mining rewards halving this year, is only increasing by about 1.8%. And so let's like put that into numbers. And this is where it gets very scary. Like a 20% increase in the monetary base in those major economies is about $8 trillion of new money, whereas Bitcoin at a 1.8% supply increase represents about $6 billion. Now, $6 billion might sound like a lot of new supply, but it's like 1 day's volume at the moment. And that's in a pretty good market. In a bear market, it's like 3 days volume. So I think that should really highlight the store of value characteristics of Bitcoin. What we try to do, which is something that other people have looked at as well, which is like, what is the simulation impact when you add Bitcoin into a modern portfolio? And we just took a standard 60-40 portfolio, stocks and bonds. And what we want to illustrate here is when we include Bitcoin into that portfolio, how the Sharpe ratio is enhanced. And I would add to this particular chart the fact that this was updated before the recent run up in the price. So the Sharpe ratio would be even bigger increase if we were to run that again today. And it brings me back to really like the big picture allocation and how do we think about a portfolio. So we've had a 30-year bull market in bonds. We've got equity valuations, probably the highest of all time. And so the 60-40 portfolio has performed incredibly well. Now, the bond part of that portfolio, at least like the short bonds, money market funds got negative real yields. And so you're seeing the likes of MicroStrategy say, hey, we've got $500 million of cash on the balance sheet, and that cash is like an ice block that's melting away. We need to diversify. And that was the reason they bought Bitcoin. And I think what you're going to see is like, as these portfolios rebalance, you're going to see move into alternatives, but you're going to see move into store value assets. And we saw a little bit of that with gold. And we saw a little bit of that that's coming into Bitcoin as well. And I think just like as a closing point from me on the gold argument, we didn't include gold into this portfolio simulation, but if you include gold, then the Sharpe ratio is going to go up even more. So I would say there's a really great case today as an inflation hedge to have 5% of your portfolio in gold or 5% of your portfolio in Bitcoin. And the great thing behind that is we can see at the moment gold and Bitcoin is not correlated. So you're getting the double benefit of having those assets move in opposite directions at the moment. I've probably taken up too much time, so I'm going to leave it at that and hand it over to Michael.
All right. Thank you, Avnish. All right, hi everyone. I'll get started. So my name is Michael. I'm from My Capital. I'm one of the co-founders of the company. And a quick intro about us. Basically, we were founded almost 3 years ago, and in early 18. And we're also SFC, Hong Kong SFC licensed hedge fund manager. We launched one of the first blockchain-themed hedge funds here in Hong Kong that invest in a mix of different equities, digital assets, and digital assets-related vehicles. And basically, our mission is really to provide hedge funds and investment services to investors to invest in the growth of this whole digital future. Now, today's topic is really around Bitcoin. So I'll share a little bit more as to how we see Bitcoin and why we think it's actually an important asset class that we should all consider in our investment portfolio. So first of all, this was mentioned a couple times already. Vivek and Avnish also mentioned across many different asset classes, Bitcoin has truly outperformed, especially over the past decade. In this chart, you can see over the past 8 to 9 years that for 6 of the 8 years, Bitcoin has actually outperformed all the other asset classes out there, including S&P, including NASDAQ index, including properties and treasuries and gold. And so I'm not saying you should move all your assets into Bitcoin, but it sort of makes sense to include a portion of your asset or investment to have this top asset class in your portfolio. And another kind of worrisome thing that people always talk about is volatility that Nish also mentioned earlier. Another way to look at this is, yes, within the year, the price of Bitcoin does fluctuate quite a lot and across a pretty large range. But if you actually look back over the past 10 years, consistently, except for 1 year in 2014, the lowest point of Bitcoin price for each year has actually consistently increased year over year. So, so yes, while you worry about the downside, even at the lowest point, you're still up. And so, what's interesting is, yes, while there's intra-year volatility that you need to manage, but in the very long run, you're actually profiting from the long-term growth in Bitcoin value. Now, other than value growth, is another investment thesis for Bitcoin is around a hedge, right? A hedge on monetary policies, a hedge on all the things that's been happening this year with COVID and different governments printing money and worry about inflation. So that story has been around, but I think I want to share a kind of another interesting aspect of this is 2018 was actually a horrible year for Bitcoin. It actually dropped over 70% in value. But interestingly is in many of the countries out there, many of the developing countries, third world countries, their demand for Bitcoin has actually continued to increase throughout that 2018 all the way to 2019. And the reason is because their own currency and their own political systems and governments are also very unstable and very volatile. And so to them, Bitcoin actually becomes a more attractive store of value for them. And so they'd rather park their assets into Bitcoin than their own currency. And so that's quite interesting, because in many times we look at this from our own view. Many of us live in very developed countries and developed economies, but for many parts of the world, Bitcoin actually function as a true hedge to their own monetary ecosystem. Now, there has been, over the years, there has been many different kind of fears or uncertainties about Bitcoin, and some of them Vivek mentioned earlier as well. So I'll try to address some of these and hopefully can kind of debunk some of these myths out there. Obviously, this is a hedge of money. We've talked about it. Is this going to last? I think what's interesting is actually fundamentally on the design of Bitcoin, with the underlying of blockchain technology, that is actually a hedge to political systems, is a hedge to economic injustices that could happen year in, year out, right? So this year it could be kind of the developed countries. Next year it could be some other places on Earth. And because there's actually no centralized control onto Bitcoin, this is itself a standalone kind of ecosystem and economy that can run by itself. And so I think this kind of social problems and political problems will continue to happen in our world. And if you take it to an even further philosophical level, is as things become more digitalized, social media and all these things, there are actually a growing number of social issues that appear related to trust, related to ownership, and all these things are specifically addressed by Bitcoin. And so that's just a food for thought for everyone. Now, many people would argue that, hey, is there any real world applications for Bitcoin? Is there any good use for it? We think it's in an evolutionary process. It starts off with people are scratching their heads. What do you do with this? And then over the past few years, there are more and more institutions, corporates, enterprises starting to make use of this. Starbucks, you can actually in the States, you can actually buy coffee with Bitcoin. PayPal has recently announced that they are supporting Bitcoin on their and crypto on their wallets. And even in Hong Kong, you can buy furniture at Price Right with Bitcoin. And I think one actually very interesting observation as well is people always think about you can make micro payments with Bitcoin, but how about very large payments? Today, if you want to make a very large transaction, I'm talking about hundreds of millions of dollars, it's going to take days, and the hurdles that you have to go through is huge. A year ago, there was a transaction that was $1 billion worth of Bitcoin. It was just transacted within minutes, and so there's really no such vehicle to do so today. And so I think just like gold, just like diamond, where people are developing, discovering new applications over many years, I think the same will go for Bitcoin. As more and more people understand it, they'll find good use for it. Store value, volatility has been a problem that people are worried about. But again, as my colleagues here also mentioned, more and more of these large companies are now coming in. They're parking their treasury. We're talking about tens of millions and hundreds of millions of dollars into Bitcoin. And so as more people understand it, as more people participate, the price will definitely stabilize over time. Now, there are some negative impacts that related to Bitcoin. Bitcoin mining, people have always argued there are environmental impacts to it. And that is true. And but we think, I myself come from technology background, the technology will continue to evolve and will improve. And so we think even the mining process and how people mine, what energy they use, renewable energies, for example, that they could use, all this will start to address some of these problems that are caused. And the ties to criminal activities, I'm not even going to touch about that. I think Bitcoin is just a tool. US dollars can be used for criminal activities. So at the end, it's really just wherever is the criminal, that's the problem. It's really not the tool. And I think finally, and I know today's topic is really about Bitcoin, but there's so much more beyond Bitcoin that uses blockchain, and there are tons of other very interesting applications. And this is something for everyone to also think about and look at. Very quickly, finally, I'll just end with, if you are interested in investing into Bitcoin, there are very different ways of doing it. You can directly invest into Bitcoin, but then you have to worry about storage. You have to worry about how you store these assets and put them in your wallets. Or there are other investment vehicles out there now. There are futures and other types of derivatives like options out there. But then you need to figure out how to manage these type of investment vehicles. And then there are a growing number of exchange-traded products like ETNs and ETFs that make it even more accessible to investors worldwide. And obviously, there are hedge funds and funds out there that would provide exposure into Bitcoin, whether they're passive trackers or actively managed hedge funds. So with that, I will pass it back to Vivek.
Thanks a lot for that, Michael. Actually, I think you covered a lot of the points. So what I'm going to do is actually I'm going to try and launch one more poll. So what is the reason we're having this webinar at this point of time is basically because there is definitely some interest in Bitcoin right now. So what we want is people to get more familiar and understand it. We're not talking about that everybody should go out and buy it immediately, etc. But it's important to get familiar with it so that you don't feel as if you're missing the bus, so as to speak. And it has gone up, and I probably continue to appreciate in the short term. But so not going to be, because of the volatility, probably we don't we don't advise a large part of your portfolio, but it may make sense to kind of dip your toe in. I'm going to launch a poll right now. Again, okay, you can see that. So what are the kind of different reasons that a person would invest in Bitcoin? So that's you cover both. Avnish covered some points in how it helped in diversification, and Michael covered some points in terms of what it does in terms of comparison with other asset classes also. Okay, so right now I'll wait for everybody to vote. I don't want to bias anybody in terms of what they're looking at. Okay, well, a lot of people have voted, but you have about under 10 seconds or 20 seconds. Please do it quickly. Okay, 75% people have voted, and so I'm going to close it now. Some people are voting now. Okay, 80%. Okay. Okay, that should be good enough. I think and the rest of the votes are not going to change anything like they did for Biden or Trump. Yeah. Okay, that's goes the end. And let me share the results. And yeah, I mean, that kind of makes sense. I think that makes a lot of sense. Diversification is what, I think everybody's talking about. Given the amount of money that is being printed in this world, other asset classes, US treasuries are down to 0.7. So earlier, US treasury used to provide some kind of offset to equity speculation, equity volatility, but it doesn't right now. Cash is, a negative drain, and there's a continuous debasement of currencies happening. So that definitely diversification, and I agree with to a certain extent speculation, given the volatility, which is imminent in this Bitcoin. So I think that's a pretty good response there. I think kind of in line with what we believe here. Okay, so I'm going to start taking a few questions now. A lot of questions. So a lot of questions are relating to. I'm going to take this myself. Is about how we can help you get access to Bitcoin. Okay, while all three of us are licensed entities in Hong Kong, Bitcoin is actually it's only meant for professional investors. You can definitely go and buy ETFs on your own. You can. There used to be a Bitcoin ATM in Hong Kong some time back. You can kind of go and open your crypto wallet and do that, and so on and so forth. But from an institutional point of view, it's really possible for us to make it available to professional investors here or accredited investors in Singapore. So it's not really something which we are kind of here to kind of tell you how to buy it. We are more trying to get you more familiar with it. And so that's the main thing. So okay, let me see. Okay, okay, how does BTC mining affect the value of Bitcoin? I mean, so one of the issues is like, there are two questions relating to that. Can there suddenly be some technological innovation that can suddenly create a lot of Bitcoin? And then is that possible or not possible? Because obviously, like if somebody discovers 1,000 tons of gold, then obviously gold doesn't become a store of value. Michael, would you take that? Or
yeah, there's always this argument about quantum computing, that if quantum computers are used to mine Bitcoin, then we all mined out in seconds. Potentially, I think theoretically that could be true, but I think like everything else, everything evolves kind of at a pace. It's not a step function. So while it is true that the power of a quantum computer could figure out the computational math very quickly, but at the same time, on the flip side, you can actually use quantum computer to increase the difficulty of the design of Bitcoin. There are, the code is actually out there for Bitcoin. There are forks of Bitcoin out there, and if there's a need to change or modify Bitcoin to address kind of these fundamental risks or technological risks, there are ways to address that. So I think this applies to both ends, both sides of the coin.
One of the concerns. So one of the concerns that I also had was that it's concentrated. The holdings are kind of concentrated with a few big elephants or whales. I'm getting a bit of a echo. Sorry. Yeah. Sorry. Yeah. So that's one of the concerns. That I think I've heard 2% of the owners own like 80% of it. Is that a concern for people going ahead to invest in this? Will it make it more speculative, or how?
Yeah, so I think it's becoming less and less. Like we do actually an analysis of we use a lot of blockchain analytics, and we collect the data. We use a company called Coinmetrics, and I think when you look at these large wallet addresses, I don't see a lot of evidence that's having a lot of impact on the market. In fact, the market is becoming much more widely held. Like you can see some of the some of the big holders. I mean, the biggest single holder is probably Grayscale Trust, but they're obviously invested on behalf of like a number of mainly US investors and some international investors as well. So they're about $10 billion now. So I think you could have said that in the past, but the whole point about Bitcoin is as the network is maturing, and by the way, when we talk about like the security of the network, it's by far and away the most secure proof of work network. You need about half the electricity consumption of Switzerland to 51% attack the network. And so the network is really converting electricity into security. And so that will evolve over time, even as computing power increases. But yeah, in terms of like how it trades and how it's controlled, that's becoming more and more widespread. And I think the allegations of the market being kind of fixed and controlled by the big whales is becoming less and less relevant over time.
For that, one more question now coming on the impact of governments. Government regulation restricting fundamental. Michael, maybe I'll ask you to answer that. So this is basically on the impact of governments. Are they regulating to restrict it? Are they competing? Will the Bitcoin be competing with their own currency? Like we've seen recently the launch of digital yuan in China, and how will the governments react to this developments in Bitcoin?
I think different government are actually doing different things. I think the growing trend obviously is the regulation of services around Bitcoin. So whether it's payment services, whether it's exchange, whether it's investment services like ours, that is a growing trend. Is a lot of the regulators all over the world are putting frameworks together and trying to define rules of how people can operate, which is good actually. They're not flat out saying this is illegal and you can't do it. So I think that's a very positive sign. Fundamentally, Bitcoin is I think it's a double-edged sword for many governments. It could be drawing capital away from their own currency, but at the same time, it is being welcomed by a lot of the people locally. So I think the other aspect of it, I think what's interesting is even many countries are officially saying that it's a legal right to own Bitcoin. So it's not like they're saying this is an illegal thing that you shouldn't own. So I think as government understand more and more of it and understand the power of it, I think this is more regulation is good, and I think it's moving in the right direction.
Yeah, I think from whatever I can make out is that there's still a lot of uncertainty. I think there's an echo, so I maybe will talk about that. There continues to be a lot of uncertainty about exactly what's happening in terms of government, in terms of large institutions, but it's changing slowly and steadily. And I think it's obvious that it won't happen overnight. But you can see the question on are large institutions investing. I think in one of my slides I showed that there are some larger institutions getting involved, PayPal, Square, Grayscale, and some of the larger companies too. Governments are also ultimately all three of us here are regulated by entities. So we can still talk about it, and so it's slowly changing attitudes. But obviously we're not at the final stage yet, and may not be there for another 5-10 years. One doesn't know, but that was our objective of this webinar in any case. A lot of questions about how we can buy it, where we can buy it. I think for retail investors, they really have to do it themselves. They have to figure out what makes sense for them. For professional investors, I think we have some solutions available, but I don't really want to talk about it because we have both retail and professional investors here attending the webinar. I'm going to kind of unless there's some other question, I'm going to do a poll, and then if there's any other question, we'll answer it. Otherwise, I'm going to close the webinar because we're already at 45 minutes odd. So let me do this last poll about what your feeling is in terms of investing in Bitcoins. So let's have a look at this one. Yeah, it's like I'm going to give it like a couple of minutes more in terms of
I mean, on the government topic, which is quite interesting, I think it's obvious that the U.S. government is adopting a very proactive approach to cryptocurrencies, which is they've moved away from the idea that they need to regulate cryptocurrencies to the idea that they should regulate the cryptocurrency intermediaries, and that's quite a positive step. So allowing cryptocurrencies like Bitcoin to be on the PayPal network in the US clearly shows you that they're okay with it. You know, they don't want to stunt the technological innovation in America. The fact that the Department of Justice, in their words, is making really good progress in terms of stopping money laundering and terrorist financing. You know, I heard the Department of Justice recently talk about if you want to money launder, then it's kind of dumb to do it in Bitcoin.
yeah,
You're broadcasting every transaction to the public, and you know, and the DOJ's even had instances where they've put wallet addresses on, which are red flagged wallet addresses, on Twitter, on their Twitter account, and there's people following the money around for them. So you know, it's almost like a self enforcing situation, right? And as long as you have a set of intermediaries that are regulated, that do KYC and AML, those wallet addresses can be, you know, once those wallet addresses end up on exchanges, the Bitcoin can be seized quite easily.
Yeah, I think you know, you're correct. I mean, you know, that's what I was referring to in terms of again, there's a bit of echo. Sorry, referring to in terms of, you know, growing adaptability, and actually the poll results are also kind of showing it. I mean, but I'm surprised that 23% already own it. Well, you know, that's pretty high proportion. I thought it would be lower, but that's pretty good. But 45% will include it in the coming months, and that's, you know, that's how it's going to develop, right? Some will include it in the coming months and years, and some will do it when it gets more mature, and some will probably never buy it. I mean, you know, I think it's kind of, again, a fair assumption, you know, fair indication of where people are headed in terms of Bitcoin. So do I have any other? We do have a couple of questions, but they're not really, I'm sorry, they're not really directly related, but I will definitely cover this. What's the worst scenario? That one definitely, I think, there's one more question on, it had a huge growth spurt in 2016-17, and can it increase? So let's talk about the, you know, the worst scenario possible, which is one of the questions there. And in terms of the other one about where it can go, well, people are talking about, you know, it can, you know, go 3 times, 5 times, but, you know, it's again, it's very uncertain. So let's talk about. Okay, I'll start with myself. You know, I mean, you know, it can definitely, people can lose interest in it. There seems to be some interest, and obviously any asset goes up when there's a lot of interest in it, and there seems to be more institutional interest in it with some people who have really thought it out. One of the research people I follow quite closely is ARK, Kathy Woods of ARK, and she's brought out a couple of research papers which cover Bitcoin and what she believes you know, it can emerge to be. Fidelity has a few research papers which are quite well done. You can have a look at those. So those have kind of, like, you know, made me a little bit more comfortable personally. But I'm going to leave it out to Michael first, and then Avanish, and then we're going to kind of end up on that note about, you know, what you think is a worst case scenario possible. Yeah, Michael.
Yeah, worst case scenario. I think Bitcoin was designed to be a kind of a consensus-driven protocol, and so as long as there are enough people that believe and actually work on the system, then the system will work, and it will just keep on going. And I think there's, unless there comes a point where just less than 3 people believe in Bitcoin, or a very small number of people believe in Bitcoin, therefore they start operating a network, then the whole thing will come to a halt, technically. But that is the theoretical kind of worst case. But I think as us humans and knowing how, the different parts of the world have different thoughts and everyone has different ideas. Ultimately, Bitcoin was created because it's to address people that fundamentally don't trust each other, to be able to transact. And I think that need will continue to exist as us living in the world of human beings. So I think while that is the worst case scenario, I don't think it would ever happen.
Avnish, last words.
Yeah, sure. Can I have a crack at the? We got a question about the 2017, how this compares to that, or should we? Can I have a go at that?
No, please, please answer that, and then you can answer that.
Yeah, I mean, I agree with Michael on the risk. Like the worst thing is the network, right? So networks have vulnerabilities, and there can be a problem with the code, and the network just stops working, right? Like that's not it's a non-zero probability that could happen, and so that's your risk. But when you've got developers working on it, then obviously that's mitigated to an extent. And obviously the track record. But one interesting thing I want to talk about with 2017. So obviously we had that huge run up in 2017, and we look at the cycles based on the miner profitability. And I think someone mentioned that earlier. And really, the way the cycles have worked, there's a big one in 2013, big one in 2017, is the price has peaked at the same time as the miner profitability has peaked. Now, we look at today, the price is the same as 2017, but miners are only making half the reward, right? So miner profitability is yet to peak for this cycle. And so when you look at the cycles in that way, you can argue that the next peak will be a lot higher. And that's what we've seen in the last 2 cycles. So that we have an analysis of that, and we think this up cycle is going to last about another year based on that. So.
Okay, on that very positive and optimistic note, thanks for everybody for attending this webinar. We'll plan to have a couple more, in the near future. We'll keep you updated. Good night. Thank you very much. Thanks, Avnish. Thanks, Michael, for participation.
Thank you.
Thanks, guys. Thanks, Vivek. Bye.